Welcome back. Now global markets are in a holding pattern ahead of Thursday's Federal Reserve decision on interest rates. Viewers Alexis Christoforous sat down with Dan Veru, Chief Investment Officer at Palisade Capital Management, to discuss the Fed, the outlook for China, and its effect on African markets.
Dan, thanks so much for joining us today.
Thanks for having me.
I want to begin with the Federal Reserve. This is one of the most highly anticipated Fed meetings in quite some time. Everyone has an opinion on what they're going to do. What is your opinion?
I believe the Fed is going to move by 25 basis points. And I believe that their goal is to get off a zero interest rate policy. 25 basis points is not going to have a material impact on anything coming up from zero. I do believe from that point on they will allow the data to dictate the direction of interest rates.
Do you think that a move of 0.25% higher would be more of a symbolic move than anything else, sort of letting global markets know we think things are stable enough, at least here in the U.S., that it can withstand a slight interest rate hike?
That's exactly right. It sends the message that the crisis is over, that the economy, while not at growth rates that we would like it to be, is on the mend, and we are off a zero interest rate policy. It's no longer needed.
How much do you think China will play into their decision, if at all?
I don't believe it plays into this decision. I do believe it plays into future decisions about the direction of interest rates.
Do you think that the economy, the U.S. economy, does indeed show signs that it can stand on its own 2 feet now?
It really does. You have to look really at almost two economies. There's the global economy, with the U.S. obviously being the leader in that regard, and that's tepid and uneven at best based on the geography. But if you look at the United States has an undercurrent of growth. We have lower energy prices, which consumers are benefiting from, and that takes a while to really circulate throughout the economy. So that stimulus, while it's beginning to take hold, has really yet to really unleash its full positive force on the U.S. economy. Remember, the U.S. was the first major economy leading the globe into recession, and we're firmly out of recession while other countries are simply behind us.
Speaking of recession, I mean, China's economy, while growing, is not growing as quickly as we had first thought. They're a major consumer of our products and vice versa. If China were to weaken further, are you concerned that our economy could perhaps fall back into recession?
Not simply because of China, but China is, let's be clear, is very systemically important globally, has more implications on the emerging markets. And that's really what I think this pullback in U.S. equities has been all about. It's not just so much China, it's the contagious effect that lowering the value of the yuan, what that could do. Could that set off a wave of competitive devaluations throughout the emerging markets? So far, it hasn't happened.
Right. We have seen, though, severe weakness in some emerging market currencies, and certainly the low oil prices that you talked about. While good news for consumers, bad news for a lot of the oil producers and emerging markets that depend on oil, such as Africa. What is your, I know this is not your area of expertise, but what is your outlook for those emerging markets in this current environment?
Well, it may not be great for Africa. It's very good for those emerging market economies that do use a lot of energy products, because many of them do. And I believe that's probably been a cushioning effect on preventing them from having to stimulate at this point, since they are a big consumer of energy products. So they are benefiting from it. Africa, differently, obviously, you know, they've got issues because natural resources are just such an important part of their overall economy.
And many of those are actually tied to the yuan,
yes,
unlike other parts of the world. Speaking of China, their government is really pulling out all the tricks out of their hat to try to stabilize this market. Why do you think nothing's really taken hold so far? Because the free market ultimately will set the price of equities and other financial rates, so on and so forth. When I think the government's they're used to having total control over every aspect of how things happen, including how fast GDP grows, so on and so forth. They're going to have to evolve into much more of a free market type of economy, because intervening the way they're doing right now is only going to prolong the pain and not make it go away. Short-term predictions for China's stock market.
Boy, I mean, it's very difficult because even though the market has corrected so much, it's still highly valued. So, you know, valuations matter at the end of the day, and I think that's what that's really what the market is telling you. It's that you have an emerging investor class that's really not used to owning shares. They're really very new to the game, and they're realizing that stocks go up, and equally important, they go down as well.
Right. Don't lose sight of that very important fact. All right. Well, Dan Veru, Chief Investment Officer at Palisade Capital Management, thanks so much for joining us.
Thank you for having me.
And I'm Alexis Christoforous, VOA News for Africa 54, New York.